All right. Welcome to a special edition of the Trading Room for Tradingology here on November 21st. And we got one happy user coming in, so welcome. Dave should be coming on shortly. We'll get started in a couple minutes here once people start joining in. If you got any questions, just let me know in the chat. As this one's going to be open to members and some non-members as well, so welcome if you're new. If anyone has any questions after the fact, if they're watching the recording, and in fact, I have confirmed I actually am recording this one, so we're good to go there. You can always reach us at support@tradingology.com. Hey, Dave.
Good evening.
Good evening, yes, and I have pushed record. I've triple verified. I couldn't believe that this morning. I'm like, you gotta be kidding me.
Is there a function that allows you to automatically record, or are you recording it from like Camtasia or something?
I'm recording just through Zoom itself, so there's a way I could record every meeting when I just started one, but I choose not to do
that. Ouch.
Yeah, I got bit twice now. I think it's funny because it was the first one of the year and the last one of the year.
Right. Oh, man.
So this one I did send out to a lot of people, so we might have some new people. So we'll see how it goes.
Okay, good.
So I figured I got my lists up here. You can see my screen, I'm assuming, correct?
Yep.
All right. We got those bases covered. And then I was just going to quickly cover the high-level one, so I do have my questions.
Okay.
And if people jump in, we can address it. So we might get some people we've never met in here. We'll find out.
Yeah, that would be cool. Yeah, that would be very interesting.
A little different with the market's just about to open here.
Yeah.
With the opposite, right? Instead of seeing the market open, we're seeing the futures market open.
Right. Yeah. The only indicator I have that works on that is the price signal.
Yep, definitely. Yeah, so we won't be watching the indexes tonight since they're not moving.
No. You may hear a couple of orders though, because I put on a short position actually about 435.
Gotcha. Yeah, we're already, we'll see what they do here with the futures opening up here in the NQ. We'll see if we get any action up here. Sometimes it's really slow, sometimes it moves.
Yeah, you never know.
We'll keep our eye out.
All right. Good deal.
All right, so the first one I had that we'll recap was from James. And James's question was, with so many indicators and metrics that we're following here that are powered by market internals, and while we're speaking of that, I'll bring over that dashboard there. Obviously, we'll look at this previous day's internals, since again, the market is not open right now, but we'll see what they did and what we watched there. So we have the advancing and declining volumes. We have the up and down volume totals here that are mapped out. Then the entire market as well, the old way and the new way.
Yeah, and the MC oscillator is the one that I follow the most.
Oh, I will bring that over so we can show that too. That is on the the index charts there, you bet. So we'll bring that over.
And actually, it was a near perfect setup this morning because let's see, we did that around 10 a.m. my time, so it was about 9:30. I think it was around that. It was about that 9:31. Right in there, yeah. So we were talking about it right in there, and all of a sudden, where was it? Was it right at 10 o'clock? Because that was our very first question.
Yep, exactly.
And the market jumped right up to that SR1. And so my response to that question was, well, what happens is if you don't have a lot of volume coming through the market, it's not going to move the oscillator. And so you know that when if you get a sharp advance in the market and the oscillator does not move, it stays flat, then that is basically a fake out. The market makers are pushing the price of the futures higher so they can short and and take out all the short stops. And so they're selling all the buy stops are taken out, and they're filling those orders. And then you can tell that if the oscillator does not move, then the market will continue to decline. And that's exactly what happened. So we had a kind of a run up, and then we had a very sharp drop back down. And that, I mean, it doesn't look a lot on there, but I think it was like around 50, 60 points.
Yeah, if we look at the Dow at the YM at the same time, 9 o'clock there, we were up around 27,775, and we went all the way down to 27,700. So a good 75-point move on the YM for sure.
Yeah, so that was a pretty good move. So you want to take a look at the market internals work just as well, but there is a lot of manipulation in the market, especially on a short-term basis. And so you want to watch, the one that I watch the most is the oscillator. And if I don't see that yellow line in the oscillator moving higher after a sharp move up, then the likelihood is we're going to continue to go lower.
The big key there too to watch is the volume behind it. If there's little volume, then it's not the real move. So the big volume is the real moves.
Yes, exactly. And so, the market internals, they work just as well today as they did then, because the large institutions and the hedge funds and professional investors, they can't hide their trades. It has to go through the market unless they're doing something in a dark pool or something like that. But eventually, most of the regulated trades are going through the exchanges, and they're going to show up in the market internals. And so it's 90%, 95% of all the trades that take place. There's large blocks, of course, that don't go through sometimes, but for the majority of the trades, even in institutional investors, they're going through the exchanges. It's going to show up on the market internals. And if the market internals aren't moving and you see a large price move higher, the chances are that it's not going to stay. It's not going to stick.
That's the classic manipulation that we see.
Classic manipulation. And if you do a longer term chart on the oscillator and on the YM or any of the indexes, really, if you take a look at the Dow over the past probably the past couple of weeks, you've seen the oscillator kind of decline. It hit that plus 10 level a few times, and then it started moving lower, but the price didn't follow. But typically what happens is it almost always follows, and that's why we're starting to get that decline in this week. One of the ways that we can time that a little bit better is by using the swing synthetic volume there. When we hit a peak, we started seeing that come down a little bit, and then it stayed green, and then it went back up again. It never went red, and then it started coming down after that point. Usually 2 peaks on that is about the most it would go.
And that's a daily chart too, so that's a lot of data.
That's a lot of data. The other thing I use is the price signals, which also are, and the swing synthetic volume and the price signals indicator are the 2 short-term indicators, which can kind of basically tell you if the market is going to decline or not. So like this morning we had, let's go back to that time period, about 9 o'clock your time. We saw a lot of red coming into that price indicator.
And our last signal was actually before the open, where the trend was coming down.
Yep, because we were up about 40 points on the YM just before the open.
Yep.
And then we got a down signal just after that. And then you want to take a look at the cloud, and you kind of know that the market internals have been turning lower over the past week or so. And you want to start to get into those positions when the price signal starts to indicate that we're going to go lower. Plus the market timer on the end of the day, at least the end of the day, is still indicating a down market.
Yeah, across the board it was on those as well. YM, NQ, there was a small little up one, but there was no real positive up volume there until we had another down. So pretty much across all 4 major indexes, we saw similar setups there, where it was up right before the open and it dropped after. And one thing that we did point out, I remember that we we've spoke to many times, but it's always good to repeat, is the arrows are not the trade start indicators. If you see this arrow pop up and paint and then stay there, it's not saying this is when you should take a short or a long in the up arrows. That's a confirmation. What we're looking for is like an oscillator to peak and then come back down. So when they start back down, that's your signal to enter a trade either on the short side or the long side. And then the arrow is the confirmation that you are on the right side of that trade, then it should continue. So that's how you want to use those oscillators and the arrows.
Yeah, exactly. And I measure them in real time during the day. So I'm watching them. And right now, on the MYM, it's measuring a -16. And we have two little red bars coming down on it. I'm on a tick chart.
Do you get the 250s on the micros then?
Yep, 250 on the ticks. So
here I had the full contracts. I got the 500. So that's the difference right now, that he's got a different bar actually.
Yep. So what I want to do is I want to see if that continues. So I'm constantly measuring that. And so right now on your chart, you have a +44. I want to see, is that going higher or lower?
Yep, so you just dropped to a 40. Now if you put these down, that's a bearish movement.
Right. So I want to see, is it gonna start going, if it goes 44, 45, 46, then I say, okay, well, I'm not going to take that because it's already pretty high. I want to try to get into that move before it starts moving that high. I want to see the oscillator move to the upside. And then now I'm looking at, okay, it's at 44. I want to see it start moving down on the next bar lower. If it goes from 44 down to 38, then that indicates to me, well, like it did, it just dropped down to 28.
And we're halfway through the tick bar right now too. I'm at 250 out of 500.
Yep. So I want to see that constantly ticking down. I want to see what the movement in that is. It's a better indicator than just watching price, because it's measuring the movement of the price. So it went from 28 to 40, goes from 40 to 28. If it does that a couple of times, and then it starts to hit the zero line, I can tell that there's not a lot of strength behind that move. And that's where I would look to be taking a short position.
And then we can compare, once this gets to 500, we form the next bar. That's the difference in the tick chart versus the time chart.
Yes.
We compare that. So if we're down to like a 20 or a 25, or if it's higher, that's going to give us the bias of which direction it's going to move.
Mm-hmm. Exactly. And the same thing on the other side. I want to when it's negative and it starts to tick up, I want to look at taking a long position. Now, the other thing that we do is we now have the Renko charts. So there's two things I look at. Number one, we're above the Renko chart. Number two, I want to watch that price signal. Is it moving higher or lower? So in this, I mean, if I was just looking at that chart alone, I'm looking for a short position because it's above the Renko cloud, and I want to watch the price signal to see if it starts to decline to that zero line. That's what I'm going to be looking for. And right now it's still climbing, so it's not going down.
Important thing too is to put the two together. So this is the zero, the tiny time frame of a tick chart, and down here we have a 10 minutes. So if we know we're below the Renko cloud on a 10-minute, that's the higher time frame, right? So that's more of the trend compared to the
order filled.
The
Yep.
chart is that you can put them together. So you can say, and especially now we're just starting. So we're literally, we're at 0.01, what's the trend of the day? Is it positive or negative? And I personally like to only trade short on down days and long on the up days. You can go both ways. I personally just like staying with the trend. That's just kind of the rule of thumb of, trading 101, right? Don't fight the current.
Yeah, exactly. So, I mean, if especially when the market internals are negative or trending lower, like that other chart that you showed that had the different types of market internals that we use, when they're under 50, that is a time. Yeah. So especially the one on the right there, when that's under 50, I only want to take short positions. I don't want to take a long position.
Definitely.
And when it's over 50, I only want to take long positions and not short positions.
And we see those equate in both, if this is continuing to step down and these are moving down, that's when everything's kind of together. That's, the rare true trend days that we see. If that's perfect, those are the really, once in a while. But yeah, absolutely. We want to be positive for the longs and on the bottom half of the shorts. And then watching that gives us the overall market overlook. Then we can use these to time the entries and the exits.
Exactly.
And we got a few new people rolling in, so welcome, guys. Andrew, is that the well-known Andrew, or is that a new Andrew? If you guys want to hit anything in the chat, let us know. I do have a question if it's the Andrew that we know and our developer. I can always hit him up offline too. While they're rolling in, we can hit our next question of David L. that we had discussed too. Talked about the different spreadsheets. So that's one thing that I can bring over too is the latest spreadsheet that we have, and watching the version 1 versus the version 2 or version 3 spreadsheets for the volatility arbitrage strategy that we do. And that'll tail into the next question as well of what do we do recently with the recent activity. And I've filled in today's numbers. The one thing for anybody that's in the member site that has access to the downloads is the new version 3 one, which has the latest and greatest algorithms and the most fine tuning that we've done, does paint in currently this bottom little strip here. You need to ignore that when you are forming your bias for the next day. So I'll just kind of move it to one line so we don't even see it. But that is important to note is it's drawing down, so we're cleaning up the spreadsheet as the formulas paint down. So this is not actually a valid one yet for tomorrow. So where we're at is we went from a positive 1 to a 0. My favorite, the zeros. But now we also have our bell curve. So we've seen, as we've migrated over from the original version 1 spreadsheet to version 2 and now to version 3 of our latest tuning, is that I no longer use the original versions in my setting the bias. So I'm not looking at the comparisons and trying to set a bias where he was asking version 1 has been basically flat for a long time. Version 2 had some minor indications. And then now version 3, we've had the latest one where we had a couple, and we have added to it the swing signal ups and downs over here, which looks at the entire picture. And we saw that there was a long time, I'll make it full screen here, where we had a long time where there actually was no signal because we didn't hit an overbought or an oversold condition until way back. When was the last one? Last one was 7/26 of 2019. So that was a long time in between. So we're trading definitely shorter in between. Then we had a couple hit there where we did peak to the short side. Then we had some long indications, and I actually have a trade on still currently that once I do close it, I'll post the information about it that I have taken along, or I've had to ride through some of the differences. So once that trade is completed, you'll see that one of the benefits of the volatility arbitrage is even if you do potentially get in and it goes against you, the nature of the Dow NDX relationship that we trade this is it will come back and it does oscillate. What it does though is if you do get caught and you have to wait longer, so it takes you away from being able to trade those indicators for the time being. So I'll cover that when I do close that trade, where we had these signals for ups, but then we had a couple down days in the middle of it where it made it a longer road than it typically is.
Mm-hmm. Exactly. So, I mean, one of the things that we also looked at was the trend chart. And so you got into that when? That was at 3.364.
Yeah, I actually got into it on this date when we had the first signal.
Okay.
The best time to get in was when this 8th column indicator actually hit the 2% negative peak, and that was coinciding with the -8 peak. So this would have been the optimum time to enter the swing trade. I was in a couple days longer, so I'm riding that out.
Okay.
But yeah, looking at the trend was a big one that we talked about too, absolutely.
Yeah, so it seems like, interestingly enough, the trend hits like these even numbers, like 3.8 was a support level for a while. You go all the way back, yep, right in there. It seemed like that was a support level for a while. And you can tell that it was going to bounce off of there eventually pretty hard because the very first time it hit it, it bounced pretty sharply off of it.
Yeah, right there.
And, yep, right there. And there was a little one before that, and then it came down and dipped below it, but it didn't stay there, see. And so
way back up.
Yep, and then it just shot right up there. So that would have been a pretty good trade. Looking at 3.8 as support, it eventually got broken, but a sharp move again higher.
Right.
And then we had the next area of support, which was 3.6, and it jumped sharply off of that. So every time it came down to a level near there, it shot higher very, very sharply. And we commented that the current level, after the 3.4 level, was support for a very long time on the spread. And the bounces got shallower and shallower,
Mm-hmm.
you know? And so that was a pretty good indication it was going to break through. Right now, we're kind of coming down to the I think it's like 3.36 or something like that.
Yeah, 3.359 right now as of the close today.
Yeah, so I mean, it's not bouncing off of that.
Right.
And so when it does not bounce off of that very, very sharply, I mean, it still might do that. So you want to keep an eye on that level. And so that's kind of the way I'm really taking a much more a closer look at the price ratio now, when I kind of determine whether or not I'm going to take a swing trade on it. And I think a lot of what's going on, especially after the Fed started injecting $60 billion a month in September, $60 billion now every single night, it is affecting stocks. Oops, I need to do this. Excuse me.
Order filled.
There we go. That was my last position. I'm done. Thought I got out of that. Hold on a second.
I was going to make sure. I'll just tailor it into the other question that we did have related to so we have the better setup days when we look at our overall strategy, and we do a trade setup alert that a number of you are subscribers for that. So if anyone is curious what that is, you can always email us and find out what that is. Support@tradingology.com. I'll fill you in on the details. For anybody that doesn't know, is we do a daily bias based on the spreadsheet, based on the overnight charts, based on the 4 hour, the 5 minute, the 1 minute. So there's multiple facets that go into setting that bias, and the 4 hour one is just one of the elements. So we get a bias for the day going into it, and we have better setup days and worse setup days. And we had discussed there, on the average of 20 trading days in a month, if we take out Fridays because we see more than usual manipulation on Fridays for whatever reason, or we might have 16 days that are potentials. Of those, it might be 10%, 5% that are the cherry pick days that you definitely don't want to miss it when we get the big moves. And then there's, the 50% where it's more 50-50 biases. So the volatility arbitrage strategy, where you're long or short the spread, is just one of the tools that we do use in one of our strategies. But then we also do, scalping that we were talking about earlier, leveraging the Renko cloud scripts that we have here on the 10 minute as well as the tick charts throughout the day. That is one strategy that you can deploy. Then as well as looking at ways of, judging lower cost stocks. Like David found the ones on Realogy and MoneyGram a few months ago where we've looked at those. So not buying these high flying stocks that are, multiple hundreds or thousands of dollars like Google, but finding, these lower cost stocks where you can ride them for a while because they've been beat up and they come back, similar to like the MoneyGrams out there where, they're $2 and $3 right now, and looking for a move up to like 6 or 7 or 10 to have an entry point where you can just make, get a couple, maybe 500 to 1,000 shares as you accumulate in the zones. Then once it makes the move, you can use that for leveraging money. And then the other one that Dave, you had discussed was leveraging dividend paying stocks like a CHI, where you just purchase those in a cash account and not a dividend or not a margin account. So they're not taking your margins or your dividends, excuse me, and just a longer term strategy. So yes, the volatility arbitrage is a very good strategy to use, but it's not something that's going to be there every single day in and day out. And that's why we have the bias service, so you can know when are the best days for those setups.
Right. So I mean, if you're interested in, doing this more intensely, even as a full-time profession, you really need to have multiple streams of income. Number one are the futures, including the VA trade. Number two is the beaten up stocks. So I really like those beaten up stocks, especially if they're still relatively good companies. I take a look at some fundamental data like their earnings and stuff like that, make sure they're not losing a ton of money. In MoneyGram's case, they had lost a ton of money just after 2009, but now they've consistently started to kind of turn that around, and they started making money again on a quarterly basis. And so I was looking at them at a very, very beat up price at around $2.50, $2.90. And, so I started to pay attention. So like the last quarter they were down 3 cents, but the quarter before that, I think they were up 12 cents. They were down 6 cents. That's like nothing. They had, they were at one point, I think they had a really big one that was down $14 or something a share.
Right.
And the reason for that, if you do any research at all, was because they had about $1 billion in CDOs, and they all went bad. And so they had to take that loss in the quarter. And it was, devastating to the stock. I mean, at one point, MoneyGram was what, like $200-$300.
Yeah, that's why I was pulling back the historical ones. This is a weekly chart that we're looking at. Yeah, if we go back to 2010, even I guess I don't. Maybe I have to move.
You'd have to go back to 2009. It was up around $300.
Yeah, before the housing bill. There you go.
Yeah. So those are the kind of stocks. Now, I'm not talking about marrying the stock. Okay, I'm talking about playing a little bit of the bounce. I mean, they had a couple of bounces already, but when you get down to like $2.90, and now the company is starting to turn around and they're profitable again, and they had a couple of huge investments, one from Ripple, the fintech company. So now you say, well, you know what? I'm not going to marry it. I just want to get in at a very good price, and I'm going to, buy 1,000 or 500 shares, like Dan said, and just kind of, if it goes up $2-3, I made $2,000-$3,000, and I'm kind of happy with that. And so I started accumulating right around the $253 level, and I rode it up to about $6.30 when I got out. So it's a nice little play. It's a nice little play, especially when you have the signals on there. You have the SM price signals on there, and that one signal that you got that on a monthly, but I use it on a weekly.
Yeah, I was looking at all the old stuff. You got it.
Yep. If you take a look at the weekly, there was a nice up signal back there in July. That's when I got in. And very, very nice price action on some of these beaten up stocks. I'm also looking at RLGY, which we got into right around 8.50, and now it's at 10. I think it closed at 10.52 today. And the other one we're looking at, there's our
the one even better.
Yep, that's looking pretty good right now. 10.60 today, yeah. So my target on RLGY was about $11. So I'm going to start, and that's where that shaded area is, and that's where we're going to start taking some profits on that. We did take some early profits just to get to feel good about our position.
I did as well. I think I let you know that one. I'm like, yep, I'm going to grab some money here. It's always nice to ring the register once in a while.
Yep, absolutely. And then we're looking now at GoPro. GoPro has been really beaten up. The market has beaten it up pretty bad, and I think it might be ready to start to take off. But on the weekly on GoPro, it's GPRO. And on the weekly on the GoPro, we do not have an up signal yet on the price signals.
I had it, but it's not showing me where it is, so I'll just make this chart GoPro.
There you go. And double click on the price thing there. There you go.
We're down about $4 right now.
Oh, looks like we did get an up signal. It must have happened
today. Just triggered.
Yeah, it must have happened today. Interesting. Well, no, actually, that was back in October, but I didn't take it because we're still in a red cloud. What I like to do is I like to see the cloud turn green a little bit, or at least go sideways for a while. You want to kind of look at all of your indicators, and in this case, We are below the cloud, pretty far below the cloud. We did have green on the daily, but on the weekly it's still red. But we're at the lower end of that, so it looks actually very attractive on the daily. You see those, the price signals are starting to go down pretty significantly. We're minus 1.61 on the SM price signal, and so I'm anticipating with the cloud kind of moving up, and it's kind of going sideways at this point. We're gonna see an upswing pretty soon. So maybe a nibble anywhere between $3.50 and $4. So we got futures, we got beaten up stocks. The other thing that we talked about was gamma scalping. You can do that occasionally, but what I like to do is park my money into CHI to get that 9.5-cent dividend, but I only buy CHI under $10. And then, so I wouldn't enter any new positions at this point on CHI. And then the other thing is to take an option on a 6-month or more expiration on a really high flyer like Tesla, Amazon, all those stocks that have an Uber or WeChat WeWork got killed a little bit too in its IPO, but Tesla has just been flying pretty high, and it wouldn't take much for $100 drop on Tesla. And you can buy a March put option for 2020 for less than $1. And, if you buy 10 of those for $1,000, and it drops, and Tesla drops 100, 150 points, which is like really not that big of a drop, then you could, go 5 or even 7 or even 10x that. And you have one of those, you have a couple of those every year, and 1 or 2 will pay off maybe. But it's worth it when you have profits on some of the other positions. The most profitable, this is one thing we didn't discuss this morning, the most profitable positions are the straight up and down futures positions when you scale in and scale out of them. The second most profitable positions I have are the VA trades when I do swing, especially lately.
Definitely.
The third most profitable is the beaten up stocks. Those have consistently done very, very well. The nice thing about those is there's no expiration to them. So you can accumulate the shares and they go up or they go down, and you can continue to accumulate as they go down and wait for them to go back up again. But they have been, the ones that I've been into over the past couple of years, I've had 95% success with those. 95% have been profitable. And I'll typically hold them anywhere from 1 to, I had one for about 4 months. And they're just really good, consistent. They tie up some money that you might want to use in a futures trade or something like that, but they are consistently profitable. You just got to go out there and find those real beaten up ones.
And then speaking of the gamma scalping, we can cover quick at one of our comments on the membership site was asking about gamma scalping and the cost of the options, where when that gamma scalping masterclass was created, it was in 2018, around June, July timeframe, when we had really low VIX levels down here at like 12.
Right.
And then we were down at that levels for a while. We had one small little peak here, but then it came back down rather quickly. Then it stayed there. So we had lower cost of options contracts. Then we had this massive peak, obviously, coming into Christmas. And then since Christmas, it's come back down. But we've had more peaks. So what we're seeing is the reason, I'm trying to remember who it was that asked it.
I think it was David.
It was Aaron. It was Dr. Aaron.
Okay, right.
Aaron was looking at it. So that's some of the reasons there, Aaron, was because all of these peaks in higher price contracts because of people that, blow up their accounts, and then the brokers have to go after them. So what they do is they raise the margin rates, and they raise the price of obviously all the options that you're buying for that gamma scalping strategy. So that's why you see some of those differences when we haven't been low for a while. If this stays low for a few more months, we'll see those prices come back down. So that's the variable that David mentioned on that this morning too, that we wanted to make sure you got that answer again.
Yep, absolutely. So yeah, when the brokers figure out that when the volatility is high, the brokers don't want to take a risk, and basically they raise margins so that if you do get caught in a bad position, and you have extra margin there so that the broker can be made whole, and you don't end up owing your broker money.
They don't have to come chase you down, right?
Yeah, and get those margin calls. So I guess we did answer David's question then, because he had the question about the VA trade, and he'd love to hear what we're doing if the VA trade is not moving. And if it's just going sideways, what else do we do? So I think we answered that question pretty good.
Yep, I think we're good there. We got James's question about market internals. The last one we can probably leave with is you had mentioned just some trading. I am working on a couple things for everybody in next year, so I'm doing some research. And as we had stated, this is going to be our last one for the year, most likely, unless something strange happens where we jump on another one for whatever the reason. So I am doing some research to roll out some new material for you guys next year, as well as those that have seen. Obviously, we're going through a website revamp, so that's going to get better. And the last one was Kevin was asking about digital assets, and if we see if XRP is actually going to go anywhere, unless it needs a marketing engine from different things that have maybe were good ideas but weren't adopted previously, and what our thoughts are on that. I can give my thoughts quickly and then turn it over to the master. Whereas I'm looking at this as a long-term investment. I personally think there's way too many people complaining that the price isn't going crazy right away. They're looking for that instant gratification where they want to get paid tomorrow. Whereas I'm looking at this as a once in a lifetime opportunity to hold and actually invest versus a day trade or the trading. So that's what's different for a lot of people. If they're used to trading, whether it's day trading or swing trading, where they see that profit right away. I'm viewing this as the long-term investment where I bought it, I'm holding it, I'm not doing anything with it. And we can cover it quickly to, hold it on a Ledger Nano, whether it's the S or the X. It's up to you. As long as you get that digital hardware wallet directly from the company, don't hold it on a crypto exchange. Use whichever one you have access to, whether that's Coinbase, Binance, BitTrue for our international friends, whatever you have access to in the state or country you live in, doesn't matter as long as you get it off that exchange and stored on your crypto, your hardware wallets. And yeah, I personally am in it for the long haul, whether it's days, weeks, or years, until it actually comes out to a benefit.
Yeah, absolutely. XRP has a number of proponents, and these entities that are using XRP are really powerful forces. They have excellent management. They have excellent board of directors. You're talking about Ripple's executives, former CEO, former vice president, I believe, Brad Garlinghouse of Yahoo. And when he left, he had written a book called Peanut Butter Manifesto, which means that, and basically it was kind of a critique of Yahoo's business model, which means that they spread themselves too thin over many different markets. And one of the reasons why they didn't capture as much market share as Google or somebody else in the market. And it's interesting that, on a side note, Google doesn't really have a news site. It doesn't have its own content. It uses content from everybody else
Right.
to grow its business, right? And Yahoo was a search engine, and then it grew into a content company. And they try to put their hands in many different things. And actually, I don't know if you know this or not, but Yahoo made a huge investment in Alibaba. Did you know that?
I read something about that. I didn't get into all the details, but I did see an inkling about that. I've also seen that they're trying to get into like checking accounts recently too.
Yeah, well, that early investment in Alibaba just about saved them, because when Alibaba went public, they just cashed in and they made hundreds of millions of dollars. So I don't know how much they made actually, but it was a lot of money, and it really saved them for a while. It gave them the cash flow that they needed. Otherwise, I think they were in danger of actually closing up.
Wow.
Or looking for a buyer. So Brad's experience there was a pretty good lesson in not spreading yourself too thin. So Ripple is promoting XRP as a payment settlement solution, cross-border payments, and so they have a lot of people who are in entities that are promoting XRP, but it's going to be used basically as a back-end settlement system. You may never hear about it in the mainstream media in the way that Bitcoin is being promoted in the mainstream media. But just like DTC, which we talked about, it's the Depository Trust Corporation, does all of the settlements for securities in the United States. $53 trillion goes through them on a regular basis. And when I looked at it, I wasn't quite sure if that was a year, a month, a quarter, or a day. But they're huge. They're absolutely gigantic. You probably never heard of them. In the same way, XRP is going to be used as a back-end settlement for corporate treasuries, for central banks, for large banks, remittance companies like MoneyGram. And so they're going to have a huge impact on the price appreciation of XRP once we get more adoption. Yeah, there you go. Yeah, 54 trillion. Oh, they're custodying. Oh, so that's custody. They have they're custodying. So it's not just the settlement, but it's a custody. And those are the two big things that are keeping cryptocurrency back from mainstream adoption is custody and legislation. Right now we have no legislation. And they look at that. They do custody for securities in 131 countries. Wow, yeah. That's crazy. So you never heard of them, but they do all of they do all the custody for the world securities, basically. And XRP is going to be along those same lines. They're going to be doing all the settlement of cross-border payments and most of the payments around the world. But you may never hear about them on the mainstream media. So, that's going to be huge. I think they're probably going to be gigantic. I don't think there's anybody else in their league. There's certainly no other digital assets that even come close to the speed, the efficiency, and the maturity of XRP ecosystem at this point.
It's just amazing how fast they actually change all their stuff,
Yeah, they are growing like crazy. So Ripple, it has stated publicly that they want XRP price to go up. They will use XRP in their payment flows. They hit SBI out of Japan. Yoshitaka Kitao has stated that he will use XRP in all of his businesses, and he owns there's a consortium, about 40 banks or 50 banks in Japan that he sits on the board of and has investments in, and they're all going to use XRP. Siam Bank in Thailand is using XRP in their payment flows. The Central Bank of Thailand is also looking at XRP. So you've got R3, which is a company that provides consulting services and software to corporate treasuries. So you think about a company like Amazon that pays vendors all over the world. Well, they need to take those payments, put them into and put them into a bank account, and then have the bank either pre-funded on the other side of the world, and get those convert that to the local currency in order to pay their vendors. XRP can do that in 3 to 4 seconds, which is normally a process like that could take as many as 5 to 10 days.
I was going to say 7 to 10 days if you're lucky.
Yep. Sometimes much longer. So XRP has a lot of stuff going for it, and it's the only digital investment that I currently am invested in besides a little bit of Bitcoin that my wife trades.
And then the best part, so you have to wait that week for your money to get there, then there's got to be a second thing because the value has changed between the two currencies in that time frame. So you either owe more or you get a little bit of a refund because they talk about volatility. It's like, yeah, you got a week's worth of volatility versus 15 or 5 seconds or 15 seconds. I love that argument.
Yeah. How would you like to be in the foreign exchange market for a week? With all the kind of volatility they experience.
Right.
I'd rather have XRP settled in 3 or 4 seconds than that. The other thing that we talked about, which was really, really important, is that don't leave your cryptocurrency on exchanges.
Yes. And
put them on a Nano Ledger S or other hardware wallet.
And only buy it directly from the manufacturer. Don't buy it off of anywhere, any site, not even Amazon.
Yeah, that's true. Absolutely right.
Let me look at my list here if anything new is showing up. I think we covered just about all of it, which makes sense because we're close to about the same amount of time here. We just don't have the interaction of a few people that came and went. And any live questions? So definitely look forward to the holidays. We can say happy holidays to everyone. And I think I forget who it was off the top of my head. Somebody was claiming that he couldn't say Merry Christmas, so I was going to say Merry Christmas for him, since I still do honor that, whether you celebrate that or not, and wherever you are in the world, and enjoy your family around these holidays with Thanksgiving for the United States, and then when Canada might have already done their Thanksgiving. I forget when they are. I think they're October for some reason. But yeah, big holiday season coming up, and enjoy it, guys.
Absolutely. Happy holidays to everybody, and we're really looking forward to 2020, especially when it comes to the markets, because the economy is starting to go into a recession. Of course, the Federal Reserve and the government will never tell you that you're in a recession until it's about 6 months or a year too late.
Until it's almost done, right?
Until it's almost done, because they don't want to scare people. But be prepared. We are already in a recession, and I think eventually, and here's something that somebody mentioned to me the other day, is that the Fed keeps printing money and money and money, and so it all stays in the financial system, and eventually, the market's going to continue to go higher. And I said, yeah, that could be absolutely true. However, the market in the end is going to have a very rude kind of ending if that's the case. How many more months can the Federal Reserve actually continue to print money? And the answer is it'll probably print money for quite a long time before we hear anything or we see any distress signals in the market. But we are going to have pockets of very, very high volatility. I think we're going to see more and more of that, like we did in January 2018. We're going to see these, pretty big 3, 4, 5% declines in a single day. I'm not sure we're getting close to that right now. Market Timer has a long-term indicator now that had a buy signal in May, and on May 13th, we had a buy signal on this long-term indicator. It only does about 2 signals a year, and we had a sell signal on November 8th. So just keep that in mind. We'll see how the holidays play out, but hopefully everybody will be safe, trade well, have a happy holiday, be safe, and we'll see you guys in 2020.
Absolutely. Any questions in the meantime? We'll be replying to emails, so we're not gone. We're just not going to be doing the trading rooms as often. So have a good holidays, and we'll catch you guys in 2020. Thanks for everything.
All right, Dan. Happy holidays.
Take it easy, Dave.
Merry Christmas. Bye-bye.